Um, I was just looking at the comments on here on the chat. I appreciate everybody that reaching out to me. Out everybody that was reaching out to me, checking up on me. I got to tell you, the person that reached out to me, that touched me the most, right here. Shout out to Homer Robinson. I could feel the just the distress in when he reached out to me. I'm looking at it like, oh my goodness, tear. And then I was going through the chat here, looking at just all of the love that people had here, and but Robinson, I knew you cared. I'm not gonna share with the world, the heartfelt um message, the heartfelt message. I'm not gonna share that with the world, but oh my goodness, I just feel so. I just let's. I appreciate y'all, man. I appreciate y'all. Yes, the quiet storm. You're in tune to the quiet storm with Freddie Cruz. If anybody from Florida, well, South Florida, if you're from the Miami, Fort Lauderdale, Palm Beach, in the area, Dade County, Broward County, Palm Beach County, you know the quiet storm with Freddie Cruz. Hey man, I jollified for my tardiness. I was in there on the couch, and someone was telling me, Tim, just get up. Cause I was like, I'm cool. I'm watching TV, I ain't gonna fall asleep. Then I was like, I was thinking, let me set my alarm real quick just in case. So I was like, oh cool, I ain't gonna fall asleep. Man, I woke up out, man. Anyway, man. Good evening, good evening, good evening, everybody. If this is your first time tuning in to Tim's Tidbits, y'all know what the link read, man. If it's not your first time, you know what it is, man. I appreciate it. Y'all know who I am. I'm pretty sure you know who I am. I'm pretty sure this ain't your first time pulling up. It's crazy. I guess great minds think alike, because I was gonna share something um from I was gonna share I was gonna share something uh from Dustin's live today, because I was looking at it. I was gonna share something, and then Father Legends shared. It was two things I was gonna share from there, and he shared one of them in the Discord. Right? He shared one of them in the Discord. One was talking about like the statistics of being a day trader, and he had like a statistic where just dealing with the market, like just dealing with the market, the S&P, I think it was. If you just buy it, so you just throw a dart and you just buy it at any time, it had like the success rate of day trader, like over time, like from like a minute up to the whole day, or hour, what it had, like the success rate. I was going to share that. Father Legend shared it inside the Discord, right? And it was one other thing one day I was going to share. I'm trying to think of what it was right now. Let me open up the Discord and go to the link. Excuse me. I'm sorry, people. I'm sorry. Right here. It's crazy. He shared the
as you want. Research annuities in our online learning center or contact our knowledgeable.
I got it in here. I got too much
stuff.
This
the part that Father Legends has shared. This one of the
wait.
This is one of the pieces I want to share.
There you go. Here is the S&P, actually. Your percentage of time that you would be positive if you threw a dart and just day traded that way. After 1 minute, you got a 48.8% chance. This was a big study we did in the past there. You can see how it's real tough. You said an hour, so let's go there. In an hour, you've got a 52% chance of being correct if you just threw a dart, picked a stock, or picked the S&P and said, from this very moment. And if you held from open to close, again, this is why money management is so important. You're barely getting above 50-50, but if you can manage those winners and manage the losers, you're hanging in there. So you're going with at least an hour, which puts you towards the tail end of that, right? I like it.
That's the one.
Yeah.
And then,
how do you know when to take the loss
right here
positive after having? So I don't know where I stand on that. You can see how sometimes you look at the data and you're like, yeah, I don't know. Going with it. It's my new term. So anyways, in 1984, didn't have anything going on. Let's put together some data for you there. So we're going to talk about that. I would like to just give you guys a bit of a teaser here and go into some of the sector performance, which I've shared with you before. We're going to do a little bit different if we can do it this way. Here's a sector breakdown with the market up at the top, and I'm changing it. I'm calling it a hit rate. Everybody calls it percent probability of positivity or percent positive. We're going to call it hit rate from now on. Sector returns down here at the bottom following the end of rate hikes. We have 6, in fact, to go on through history. These are the ends of each rate hike. We obviously don't have 2023 just yet because we don't know if we're done. But what we did is we said, let's take each sector and track the performance going forward from the end of those rate hikes. So up here is the stock market. In 1984, stock market gained 11% following the end of rate hikes, 89.10, 95.21. 2000 was the only year the markets actually went lower after the end of rate hikes. The median return in the market is 12% following a pause or a stop in Fed rate hikes. And so that gives you an 83% success rate because we're only down the one time there. Now, if you go down further, isn't it interesting? Financials have the highest probability of being positive. In other words, the highest hit rate. All right, I have to say that that sticks a little bit, but I'm going with it. It's my new term. So anyways, in 1984, financials best performer there, 14%. 1989, nothing. They were not the best performer. A couple other years later, 2000, they were one of the best performers going forward. Median gain of 2% after the end of Fed rate hikes. That makes sense. It is not the best performer, however. Utilities ranks as the best performer as a whole, going through all those different cycles. Not the best hit rate there, but if you're looking for what sector has the greatest probability of gaining something at the end of rate hikes, you'd say the odds are that financials will do it. You have an 83% chance based on the data that we have from previous rate hikes. The worst, actually, is energy. I find that interesting, kind of fascinating this time, because will this time be different? But at the end of rate hikes there, you have only a couple years where energy would manage to give you a bit of a rally. Now, something's interesting here, though. This is one of those weird times where energy prices declined with the stock market. And so if this is the end of the rate hikes, you're already sitting with energy prices at a relative discount, right? So I don't know where I stand on that. You can see how sometimes you look at the data and you're like, yeah, I don't know, this time may be different. And that's what makes a market. And materials has the least odds of being positive after having at the end of a rate hike. So again, financials have the highest odds or the highest hit rate there, and utilities have the highest return. So tonight we will explore this a little bit deeper. We'll go through the stock market. We'll show each and every one of the ends of rate hikes.
So that's the 2 points I want to share from Dustin's live. Like I say, the first one that I played, Father Legend actually shared it in the Discord with the excuse me, with the statistic of like day trading. And for anybody who wasn't clear on what it was just if you were a day trader and you just closed your eyes and you bought the S&P randomly at any time and held it for a specific amount of time, and they had like 2 minutes, 30 minutes, hour, all day, you know what I'm saying? The showing the percentage of times you would be right. So pretty much he was like, it was all about like managing risk management. If you can keep the risk management under control, you know what I'm saying, you'll probably be all right if you just close your eyes and did it. Of course, it takes more than that, but it was just like the statistics, right? And then the second part I played, that was the initial piece that I want to share. And for anybody who wasn't clear on that, he was showing the market as a whole, the performance after Fed rate hikes. So from whenever they stopped raising interest rates forward, what did the market do after that? And from this time, it did this. From this time, and then when you go down into the different sectors, you can see how hit or miss it is when you're trying to get into the specifics. And personally, that is why I just stick with the market, right? And just to share my screen and visually show this, this is why I just stick with the market. Because if you look at this is the market, right? Overall, right? This is the market. All 11 sectors, right? This top line up here is all 11 sectors, you know what I'm saying, throughout the time. And if you just look at the market, right, is only one time out of the previous Fed rate hikes, once they stop that, moving forward, the market, you know what I'm saying, was down after they stopped, right? And so I don't know how far, he didn't say how far after he looked, you know what I'm saying? I don't know if it's 1 year, I don't know if it's until the next Fed rate hike. I don't know. He didn't say that part of it, but it was like just moving forward, right? So but if you look at the market, it's based off of the whole subset, if you will. It's 83% chance of being right for being positive, and that's a median gain of 12%. So you got an 83% chance of getting 12% over like all of this subset. But when you look at the broke down sectors that make up the market, look how like risky, if you will, it gets, right? 83% for financials, but it's only a 2% median gain over the whole subset. And then the rest of them, it's like dismal. The percentage is like, it's like financials is like really the only one that's almost a sure bet, but it's only looking at over the time a 2% gain if you just riding on that alone. And then the rest of them, it's like dismal. It's like a coin flip for most of them. And then the last three, it's not good. So this is one of like, not just this, but this right here, like goes to show why I've said it a lot of times in the past. I just ride with the market. I don't try to go in and do stuff that I don't go in and try to be smarter than like all the people on Wall Street. I don't go in and try to deep dive and look through all the different sectors to find stocks to, you know what I'm saying, bet on. I just ride with the market because every guru or whoever it is that's out there trying to get a job in this industry, their benchmark is the market. You have to outperform the market to keep your job. The more you outperform the market, the better off you are. Your job is technically safe. So instead of trying to beat the market, compete with the market, I just ride with the market. That's all I do. I just ride with the market. Right? I just ride with the market. I feel like you can't go wrong with riding with the market. But to each his own. Like this one guy I was stationed with, his name was when I met him, he was Sergeant First Class Mac. I haven't seen him in years. The last time I saw him, he was Master Sergeant Mac. But he had this saying, and it went like this. And he had a way of talking too, so I got to mimic his voice. Hey, Sergeant Rogers, whatever blows your skirt up. Hey, Sergeant Rogers. Hey, whatever blows your skirt up, Sarge. So, hey, you ain't got to do what I do. You can do whatever blows your skirt up. Hey. Hey, man, let's get into it. Again, I appreciate y'all for your kiss. Hold on. Order it. Okay. Sorry about that, y'all. I thought somebody was performing an exorcist on my teenage son back there. I don't know what was going on. Hey, let's get into it. Let me share my screen. If y'all can still hear me, still see my screen, somebody drop a 1 in the chat. If y'all can still hear me, still see my screen, somebody drop a 1 in the chat. All I need is 1. What's up, Felicia? What's up, Tranisha? What's going on, Sonya? What's up? Oh, thank you, Margot. I appreciate that. Hey, let's get into it, man. This morning, shout out to Black Spiders. I shared a video in the Black Spider membership section. I shared a video over there. I want to take the opportunity to just try to read price with you all. And so I just started recording the screen. It was just like an impromptu thing. I started recording the screen and then I shared it. Hopefully it was helpful to somebody. Price action really didn't give much. It really didn't give much. And the reason why it didn't give much, if you look over here on the divergent side of the screen over here, right, you can see that these are our hourly candles, right? Right here where I got the white line sitting at right now of the cursor, that's the closing candle from yesterday. That's yesterday's closing candle, right? And going from yesterday's closing candle, right? Can anybody tell me what they noticed about the price going from yesterday's closing candle all the way over to even further than this? Well, I drew this line here, but like all the way over to, let's just stop at the line. We can actually go over to this closing candle today. We can actually go all the way to the closing candle of today. All right. We actually go all the way over there. But what do y'all notice about the price, right? Between the 3 indexes, what do y'all notice about the price? Going from yesterday's close right here, right? All the way over. Let's just stop right here at 1 o'clock, right? Right there. From where I'm moving back and forth, right there. What do y'all notice about the price with the 3 indexes? Y'all don't just jump in there at the same time. Don't just jump in there at the same time. Don't just jump in there at the same time. It's okay. The chat won't bite you. Let me know. When I'm moving this mouse back and forth here. And throughout all three, what do you notice about the price throughout all three? Right? Father Legend said balanced price range. Throughout all three, the ES, y'all couldn't even see me moving my mouse. I was moving, y'all could see me moving my mouse. The ES, the NQ, and the Dow. What do you notice about the price throughout this entire range with all three? Right? The name of this panel over here is a very big clue. I'll say it like that. The name of this panel over here is a very big clue. The name of this panel right down here is a very big clue to what no, not consolidation. It did consolidate for a great amount of that time, right? They are not in sync. Divergence. There you go. They are not in sync. I see you said they are in sync. Divergence, right? So these are hourly candles. And if you look at the price section, right, we have divergence, right? You see the highs. You see like these right here. These are the highs, right? Once I noticed the divergence on the lows, right, I went in and marked out what we had done as far as the highs. But the first thing I noticed was the divergence on the lows. That's what I noticed first, right? I noticed that first. But let me show you what I'm talking about. So looking at the ES, let's come over here and we're going to go to the trading view chart, right? And we're going to, these are hourly candles. That's good. Let's hide everything for right now. I may bring this back, so I'm not going to delete it, put it in a folder and just hide it for right now. Okay. I'm just going to squanch the dollar down and we're going to add the NQ and we're going to add the YM, right? These are hourly candles. Let's find yesterday's close. What's the day? Okay, so yesterday, right here. So all right, so yesterday's close right there. And what did we go up to? We went up to 1300. Right. So right now, let's go in here. That's why we say it's kind of hard to, a lot of times it'd be kind of hard to see when the candles are it's easier to see over there because I can get the candle. Let me squanch them up. There you go. That's why remember early when I was like, it'd be hard to see it when the candles are like spread out really, really far. All right, move it over so we can see the lows. All right. Okay, so now if we look, see, right? Look, see, right? This is the low right over here. We're looking at the 9 o'clock low to the 12 o'clock low, right? That's it. Then I need to move this over. I need to move it over a little bit more. Boom. There you go. right? So, all right. So starting from yesterday, but I really want to look at this piece, but it started back there yesterday. That's what I'm just showing what those lines are right there, right? So, all right. Looking at the lows. The lows is what really caught my attention, right? I was like, we're seeing some diverges, right? So we had divergence in the lows yesterday, right? The NQ was failing to make lower lows. This was yesterday, right? This was yesterday. The NQ was failing to make lower lows during the New York session when the ES and the YM was the NQ was making lower lows, I'm sorry, while the ES and the YM was refusing to make lower lows, right? Then going from that time, from 11 o'clock yesterday all the way over till like 1 o'clock today, or whatever time you want to see it, from that low, right? So coming from that low that it made, right, the NQ was here, right there, right? NQ, what was looking at 1300, so that's going to be the 12 over here. So boom, right there, right? So that's the NQ, right? Come over here, 12. That's the ES. Come over here. That's the YM. Right? Divergence. Right? See, diverges, middle. One went lower. Yes. Higher, sorry. Oh, because YM didn't take out buy side. Nah, maybe it did, just not with the same magnitude. Okay. All right, it's the lows. It's the lows that I was looking at, right? I was looking at the lows. We had divergence. We had divergence here. This is what caught my attention, right? This is what caught my attention right here. We got like the divergence. We started out with the divergence over here, right? Yesterday morning during the New York session, right? And then when we look at the New York session for today, right, it starts somewhere inside this candle right here, right? The New York sessions. Let's go down to 15-minute candles. Hopefully it don't mess everything up so we can get the exact time. The actual candles don't matter. We just looking at the low, so I can squanch it up pretty good. I can squanch it up pretty good. Now let's find the actual New York open over here, because we know the divergence was during the New York yesterday, right, for the lows. And then 9:30 right here. Right. So that's the New York open from today, right? And looking at the New York open from today, right? We came up, we start coming down, right? And then we see we got divergence on the lows, right? But from the New York open on today, right? The Dow sold off, like just without even trying. The NQ tried to push up some, showing some strength. So even internal on the 15-minute, we got some divergence going on right here in the first, what's that? 15, 30, the first 30 minutes or so, we got divergence going on here because the NQ showing more strength there. Then the ES start to give up the ghost also. The NQ start coming down, giving up the ghost also, right? But then that's when you see the bigger picture overall, right? That the divergence is there. The NQ is clearly showing more strength from yesterday's low during the New York time. Well, it wasn't a low, but from that low that we was using from New York time up until the same time frame from the New York, right? The NQ is clearly showing more strength, right? So we got divergence going on inside the three indexes, right? When you have divergence within the three indexes, right? Now let's invite the dollar to the party, right? Let's invite the dollar to the party. We already know it's divergence near, so we're gonna squanch these down so we can actually see the dollar, right? So when we invite the dollar to the party, right? Spread it out a little bit and look over the same time frame, right? Invite the dollar to the party and look over the same time frame, right? So as we see, what's wrong with this picture, right? Coming over the same time frame. What's before I mark it, right? From the same time, there a whole entire time frame right here. Before I mark it out, what's wrong? What's clearly wrong with this picture, right? Oh, from this area, over from the left side of the screen to the right side of the screen. This is the dollar. This is the ES, right? What's wrong with this picture? When I go from, you know what I'm saying? Ignore everything that's in the middle, right? But when I move my mouse from this side of the screen here, right? And then I bring it to this side of the screen here, what's wrong with this picture? There you go, right there. Dollar doing the same thing, and it should be inversed. The dollar is doing the exact same thing as the indexes, right? It's doing the exact same thing as the indexes. And when the dollar is doing the same thing as the indexes, that's diversion, right? That's a cracking correlation, right? Divergence, I'm sorry, cracking correlation, which means it's going to be high resistance liquidity runs. And what's a high resistance? What's a telltale sign of a high resistance liquidity run? A bunch of back and forth, a chop suey, right? Market acting unpredictable. Market may respect PD arrays, may not respect PD arrays. The market may print conflicting PD arrays. Market not giving you a clear draw. Appreciate you. Appreciate you. It's not going to give you a clear draw on liquidity. It's not going to act exactly as you think it should. It's going to be less precise. You know what I'm saying? It may overshoot your PD arrays. It may start acting like you think it should, but then go against you. So when you notice divergence like this, and the divergence is unrelenting, it's a good idea just to stay out of the market. It's a good idea. I said dear. It's a good idea just to stay out of the market, right? Just to stay out. You don't have to, but if you're going to go in, look for short, like just quick pop shots. Don't be trying to get no big moves, right? Because the market, and as you look at the price over all this time, right? Yeah, this may look like a nice big drop down right here. That might look like a nice huge drop down right there, but trust me, this right here in this beginning part here, oh, it wasn't nothing nice to sit through, right? And if you wanted the black spotters, you could see me sitting there talking through the price, candle by candle, looking at price, saying what I would like to see, talking about, okay, boom, if you do this, you know what I'm saying, if you do that. It wasn't just clean and clear cut, right? just look from what the price was like, looking at it in hindsight, looking at it in hindsight, you can say, oh yeah, it was clear, it did this, it did that. It wasn't clear. It wasn't clear cut, right? Let's just do this, like wait for it to come here, do that, and let's short it. It wasn't clear cut, right? Even though I talked about yesterday, I was expecting it to try to make a Tuesday high and then sell off. It ain't just come out here and hand it to us on a platter, right? It masked it very well. Yes, it started dropping pretty nice here, but it masked it very well. And as you can see, right, if you look right here, if the dollar is dropping like this, nobody in their right mind is going to be overzealously shorting one of the indexes. Why? Because the dollar dropping like this right here should give strength to the index to push it back up. That's why you got to be very careful when you listen to some of these furus that look at the chart in hindsight and don't give it to you realistic. Like, oh yeah, boom, this was clear, it did this, but they can't point out to you why it was so crystal clear unequivocally, right? Anybody who know how to read price and look at this chart right here, they can see that this right here was not a clear cut, I'm going all in and ride this down drop. And why is that? Because the dollar is dropping at the same time. And the dollar is dropping aggressive. Look at this 15-minute candle, this 10 o'clock candle on the dollar right here. Look how far this candle is dropping down here. But look at what this candle is doing on the ES. The bottom is falling out of the dollar. But the ES went up and started pulling back when the dollar is fall. If the dollar dropping like this right here, right? It's dropping like this right here. Anybody in their right mind is trying to go long on the ES. But guess what happened to you? If you tried to go long on the ES right here because the dollar was dropping like this, you got bust in your freaking head. Slapped up. And the way the dollar is dropping, right? Let's just look at the dollar in this section right here. Right? Let's just map out this divergence, right? We're going to come here and we're going to highlight this area of the dollar right here. We're not going to extend that to the right. Right? So that's from 9:45 to 10:45. Over that hour. We're looking at that hour. So 9:45 to 10:45. High to low. Now let's spread it out some. Now, coming here at this 9:45 candle, right? You see the dollar dropping right here. Let's go down to a 5-minute chart. All right, let's look at it on the 5-minute chart. Okay, so on the 5-minute chart, here we go here. We're looking at this area here, right there. All right. The dollar getting ready to drop. I'm just looking forward, see if we get a clean entry to go long on the ES there. Right. We're going to see if we get a clean entry to go long on the ES there. Right. Okay. So here we go. Okay. Here we go right here. Right here. You see this here? Do you see this here? Do you see this Bissy and you see this Sibby? Do you see it? If you do not know what you are looking at now, right? You need to go back through all of the core content so that you can understand it. I don't have time to explain it now, but we came down, we took out sell side liquidity, right? We moseyed back up into this SIBI here, right? Mosey back up into this SIBI right here. I guess I can mark it out while I'm talking about it. Put a snap on. Mosey back up into that SIBI right there. And then this big candle right there, what do we call that? Pang-yow! Right? We got the pang-yow. Right? We came down, took out sell side liquidity. Pang-yow! Right? That gives us a huge busy that took out buy side liquidity after taking out sell side, right? Right here on this same candle, the dollar dizzed. What the dollar give us? Pang! To the downside. The dollar gone. Right? The dollar gone. But let's look at one very important clue. One very important clue. What did the dollar not do? Can somebody put it in the chat for me? One very important clue that can very easily go unnoticed. What did the dollar not do? It can very easily go unnoticed with the trickery, trickery of the price just moving super fast. What did the dollar not, what did the ES do here, right? That the dollar did not do here. What is wrong? Right? What is wrong? Right? What did the ES do that the dollar did not do? Right here. When we come in here, what do we want? That when we come to a destination, I put it to you like this. When we come to a destination, what do we start looking for? Right? What do we start looking for? There you go, right there. Right? Now, and I say the trickery. The reason why I said the trickery, one clue that was the trickery, right? This is why it was trickery. We want to see this divergence. We want to see that. We took the lows. That's a destination we're coming to. It's giving us the divergence, right? We want to see that. That's an important clue, right? That we want to see, but in this case, it's the trickery. It's the trickery, right? Because our bias was to go short. Our bias was to go short. We said yesterday, we want to make higher highs and then go low. We wanted the turnaround Tuesday, but the market was constantly showing I want to go up, just like right here. I said this bullishness acting like it want to keep up. I kept saying it. This bullishness acting like it want to keep up, right? And it's giving you all the clues that I want to keep going up, right? It's giving it to you on a platter. I want to keep going up. So what do you do in this situation? If you get the divergence, you get the pang out to the upside, right? You get we got the SIBI over here that we're back above, expecting it to act as support. We got the BISI right here that we're trading back into, right? The dollar is dropping off the face of the earth. We fill the fair value gap, get into the order block right here on this 10 o'clock candle. And anybody in their right mind who says, hey, I'm just trading it, you know what I'm saying, without a bias, I'm looking for my short little 5-point moves, right? Because like I say, you can find them 5 points every day. Like ICT was saying, you can find them 5 points every day, but outside of them 5-point moves, this looking like let's go. But the bias is to the downside, right? So it's not giving you, you know what I'm saying, the sales setup that you want to see, right? So if you go long there, you're happy. I'm happy. Yes, indeed. Even though it's just consolidating, it's consolidating slightly to the upside. We came back up to this SIBI, right? We came back up to this SIBI over here. Can I get a copy of the SIBI? Can I get a copy of this? Thank you, SIBI. Came up to this SIBI over here, right there. Boom. We went to that SIBI. Hello?
Hey, I know you.
All right, y'all. I'm about to wrap it up. At Jalapies, I got to wrap it up. Chris hanging out with his homeboys, and they just about done. But like I was saying, just dilly-dallied around in here. You know what I'm saying? Nothing, not giving anything. So it's after hitting this area to go long off of, it sat there and just consolidated from 1003 all the way over here to 1018, and then it started to drop down and bust you in your head because your stop would have been over here, right? And you would have been trying to figure out what in the world is going on because the dollar is steady dumping, right? The dollar is steady dumping, and you're in a long trade trying to go up, and you're trying to figure out why in the world am I getting busted in my head when the dollar is dumping right here, right? So boom, you all bust in the head, you all, you know, that. And then when you look back here, and then you say, oh, here we go right here. It's clear, right? We went up, we took out the sell side, took out the buy side, consolidated, dropped down, took out the sell side, traded back up into this new SIBI over here that's right in line with this old SIBI over there, and then we sold off, right? Right? Okay, I'll see that, right? I will see that, and I will raise you another 52 fake out. Let's look at the price action together, right? After coming down, taking out the sell side right here, right? Get through it pretty quick so I can go, right? We come, God dog it, get on there, man. All right, come down, take out the sell side, right? Consolidate here, take off, get all the way back up here to this this SIBI right there, right? Now let's really inspect it. Let's see how clear it is. Let's see how clear it is. How many PD arrays I just drew out? One, 2, 3, 4. We just cut through 4 PD arrays going to the upside, right? To get back to this SIBI, right? All while the dollar is dropping, right? The dollar is dropping. The dollar consolidated here and then dropped, right? If the dollar consolidates and drops and the ES consolidates and pops, cutting through 1, 2, 3, 4 PD arrays, right? That's a sign to go long, right? The dollar is dropping. The ES is going up, taking out PD arrays. Go through 3. If you blast through 4 PD arrays, right, that's time to sit on the sideline, because it's the probability of your short or long in this condition has dwindled because you've cut through more than 3 PD arrays, right? So again, it was not so clear cut that this was time to go short right here. Right there, it was not screaming, short me, please, looking at what the dollar was doing. Very, very low probability, very, very high resistance, right? Liquidity run. Because the dollar is, in essence, coming from this time of day to this time of day, is doing the exact same thing as the ES. They're both going down. Both of them, both going down. They're both going down. So it's not super clear. Chop suey patooey. Chop suey patooey. Right there. Now, if you were in the vein of, I'm just going to look for reasons to short, right? I can honestly say that if you were watching the market the way that ICT teaches to watch the market, you either were taking your butt cheeks probably were super tight, or you were just straight up gambling, because nothing about this was screaming in real time. Like, it's easy to use hindsight and say, oh, it's clear where it went. But in real time, if you really know how to read price and look at what these candles are doing, there's nothing about this that says low resistance liquidity run, attack the sell side. It's very clear I want to hit the sell side, because we got all of this divergence going on, and the divergence between the dollar and the ES, right? What the dollar is doing, that's saying buy the ES. The dollar movement is saying buy the ES, right? The dollar movement is saying buy the ES, but the ES was still dumping. I'm gonna look at the chat real quick and then I'm gonna get out of here. I ain't really stressing because him and his homeboys hanging out right now, eating. But I don't like being that parent who have other parents sitting around looking at their watch. Does Tim do live streams in the New York section? He only go live to review the market. Yeah. Yes. I go live before. Thank you, Hit, Learn, and Share. Thank you. I was going to say that. Thank you. Exactly. I would say, okay. Why did the ES and dollar? Why did the dollar and ES go down together? Then when they should be. Hold on. Why did dollar and ES go down together? Then when they should be inversely correlated. That's what we're talking about. Is divergence. It's manipulation. It's manipulation. It's divergence. It's a cracking correlation, right? It's not a clear. It's not giving you a clear draw. It's not giving you a clear target. It's a cracking correlation where the dollar is saying buy, but the ES is still dropping, right? The NASDAQ is, let me see what they was doing during this time. Okay, so the NASDAQ was given divergence at this time. The NASDAQ and the ES, they both were going up, but the NASDAQ had a little bit more strength in it. Because if you look at this high, the NASDAQ came much higher above that high than the ES did. Even all the way over here to this time frame, the NASDAQ was higher than that high, but the ES wasn't. And then the Dow was struggle city the whole time. So we got divergence inside the three indexes, right? So it's like a cracking correlation everywhere. And then the dollar is diverging with them, right? Everything is just, this is all manual manipulation. I count all this to manual manipulation. It was very there's no real answer of why. It's just one of the things when you see it, you know to stay out of the market. I was waiting for a sell setup as well, and this setup was too good to be true. Yes, nothing. I got hit in the head. I was going to share a trade. I was going to share a trade that I got into, and I used trade management to get me out, stop me out at 2 ticks. I didn't share it. I was going to share it in the Black Spiders thing, but I had already shared a market a tape reading session, and I'm trying to manage expectations. I don't want people to think like, hey, this is what I'm going to be doing all the time. I'm going to be constantly sharing videos like this right here. So I was trying to manage the expectations. Let me see. Check this out real quick before I can share. I hit the wrong thing. I want to share a video file. What did I hit? Yes, I did. Videos. I think this is it right here. Yes, that's it. Is that it? No, that's the wrong one. Let me find the right file. Let me find the file. Okay. What's the name of that file? At 2:39. Okay. Video file. I need the one at 2:39. 14:39 right there. Okay. And again, this is what I'm talking about here, where what the market is showing and what the market is doing is like different things, right? So as y'all see, I got the order sitting there waiting, right? I was sitting back here watching the market, dozing off, and when I woke up, right, I saw this candle right here had spiked up. So I just dropped a order in right there, waiting to see, you know what I'm saying, while I checked everything, because I just woke up. So I'm going in trying to look to see what's going on, to see if I really want to get in there, right? And so once I get in and I really look at everything, scope it out, I go in and I actually set my target to the consequent encroachment of that fair value gap, right? So once I figured everything out, I said, okay, yeah, I do want to get in. And so I set my target there, boom, right? And let's skip to Malou, right? It's going through. You see what my stop is down there. I just got them up there somewhere randomly while I try to figure out what I want to do. I'm looking at different, I think it's a volume imbalance right there that I'm watching, right? And I'm like, if I get a closure below this volume imbalance right here, then this gonna be no bueno. This gonna be no bueno, and I'm gonna try to figure out a time I can get out of this trade without losing anything. If I get a closure below, I don't know if y'all can see me. I don't know if y'all probably can't see my mouse. Y'all probably can't see my mouse. Can y'all? I can't even see the video file. Can y'all see my mouse? Can y'all see my mouse on the screen? No, because I can't even. Hold on. Hold on, let me see something. I might need to. Hold up. Let me try this so I can get out of here. I don't think it, okay, let me do it like this. All right, I'll do it like this right here. Now y'all can see my mouse moving around, right? Now you can see my mouse. Okay. All right, so that's the volume imbalance I was talking about right there. So I'm like, if we get a closure below this volume imbalance, that's going to be no bueno. And I need to figure out a way to get out of this trade without taking a loss, right? So you see the bodies are still respecting the volume imbalance, right? Boom, we come down, right? We rock it down, right? So we coming down, right? So I'm sitting, I'm like, it's got, if it give me a chance to get out of here without taking a loss, I'm gone, right? So boom, we get back up above, and I'm still watching price. And then look at the dollar right over here, right? Look at the dollar. The dollar is dumping. The dollar is giving. Let's go ahead and rock it up, right? Let's go ahead and rock it up. We've come down and we've taken out sell side again. I'm still in the trade, right? So moving forward here, right? I put up that line there. I said, if we get above, if we get above these highs right here with some force, right, and then we get above this high right here, I'm locking in profit above this fair value. This volume imbalance, and I'm gone, right? Right. So because I'm just managing the trade right now. That's why I got the cursor sitting there so I can see when we get back to this high. I want to see us push through there with some force. I want to see us go through there with some force, right? Because I'm still looking at what's going on over here. And then you're going to see me mark out something on the dollar that I want to see. See, we come back down, come into this fair value gap right here, because I'm like, we still got imbalances down here, so we can come down here. That's why I ain't close it out just yet, because I'm like, we can come back to these imbalances, so I'm giving it room to breathe, right? So, because I'm already in it, so I'm just giving it room to breathe, right? So then, boom, you see me mark out this SIBI here. And right now, I'm like, this SIBI needs to keep price down. It need to keep price down in order for me to believe it want to go up some, right? So coming on over, right? I mark out that SIBI right there. I'm like, I want to see us go through this SIBI. We need to bust through this SIBI with some force, right? We push through the SIBI, get back to the volume imbalance, right? We get through the volume imbalance and made a new volume imbalance in the same spot, right? Again, giving you this false sense of hope. We blew through the SIBI, left a fair value gap inside it, right? And made a new volume imbalance in the exact same spot. False hope. We get to the high and we start struggling. We're struggling. I want to see us run through that. We should be glad. We should have shot through there with some aggression. You know what I'm saying? We still stalled and struggling, right? So then we start, you know, we pump fake and we come back down again. Come back down. We came back down here to this Sibby, but we didn't get into the Bissy that we made in the same spot, right? Giving you the false sense of hope, right? Push back up again, right? Right there. We push up and we get there. I'm going to go check to see if we took out that high, right? I'm going to check to see if we took out that high, right? I'm like, yep, we took it out, right? Come down there, grab my stop, move my stop up. Where? Right there. Boom. Boom. That's where I'm putting my stop. You got to come get me, right? And watch what it does. It's going to come get me very quickly. Oh, you want me to come get you? I'll come get you. Watch it now. Watch it now. Watch how quick it comes and get me. All the way to the bottom of this Sibby right here. Watch how quickly it comes and get me. Goes up just past consequent encroachment of that wick, flirting with the bottom of that new week opening gap. And then again, I don't know if y'all can see it right here, but this is another new week opening gap that we're in between these two. We're in between these two new week opening gaps. I'm coming back to this area here because I said if we get a nice push up, I'm going to move my stop to there. Right? I was like, if we get a nice push up, I'm going to move my stop to there. Right? I'm going to lock in just over 2 points. I like if we get a nice little push up, we get a closure above this high, I'm going to move my stop up to there. And the price said, oh, yeah, that's what you're going to do? If we get a closure above that, okay, watch this, buddy. Hey, right to the bottom of that. And I pointed out, it came right to the bottom of that. Anyway, that is what I was talking about when I said, if you don't have people talking you through the price in a realistic manner, don't listen to them. Because it's easy to look at a chart, just look at one chart and say, oh, this is what it did. This was crystal clear. But when you're sitting through that divergence, when you're sitting through that chop suey, it tells a total different story. It tells a total different story. Hey, man, I ain't even got no time to really do the closeout like I usually do. So I'll just say take advantage of the day and tell your loved ones that you love them today. Don't put it off till tomorrow. I appreciate y'all for always tapping in. I got to go up here and get my son. Again, I apologize for getting on late, but I had fell asleep. Well, I had fallen asleep, I should say. That's that Broward County education. I had fallen asleep. But again, I'll see y'all in the morning at 9 o'clock for the overnight price action. Y'all enjoy your families. Y'all enjoy the rest of your evening. Yeah, gone.